In 2008, the global economy was on the edge of collapse. It started in the US, but spread across the entire world. And the scary part? It wasn't just one mistake, it was a chain of many. And this wasn't the first time. Now think of this as a simple story. One day, someone wants to buy a house. They go to a bank, take out a loan, and buy it. At first, everything seems fine. But this story doesn't have a happy ending. So, what went wrong? In the past, banks were very careful about who they gave loans to. They only lent money to people with stable incomes, good credit, and a reliable financial history. But in the 2000s, things started to change. Because investors around the world were all looking for the same thing: low risk and high returns. And they believed they found it in the US housing market. Investors thought, we can make good money from these mortgages. But they didn't want to deal with loans one by one. So banks came up with an idea. We'll bundle these loans and sell them to investors. And this is where things started to get complicated. To sell more of these products, banks needed to give out more loans. But there weren't enough good borrowers. So what did they do? They started giving loans to people with low income and poor credit history. In some cases, they didn't even care about income at all. At first, everything still looked fine, but then payments started to rise. At the same time, housing prices kept going up. Everyone believed the same thing. Worst case, we can just sell the house. But this was a bubble, and bubbles always burst. At some point, people started missing their payments. Homes were put up for sale, but there were no buyers. Prices started to fall. And as prices fell, more and more people stopped paying, and the crisis began to grow. Then, the domino effect began. Banks started losing money. Some of them collapsed. Even giants like Lehman Brothers fell. Markets froze. No one was lending to anyone. The stock market crashed, and the economy fell into a recession. So, what happened next? The government stepped in. They gave billions of dollars to the banks. They bailed out companies. They pumped money into the economy. Because if the system collapsed, everyone would suffer. So what did this crisis teach us? When people can pass the risk to someone else, they tend to take even more risk. Big companies often believe they'll be saved no matter what, and sometimes everyone can be wrong at the same time. But the most important thing is this. This crisis was a failure of the system, but the system was built by people.